A top question I'm getting right now is, will rising mortgage rates cause a recession in our economy? And it's a great question, because there is a lot of talk about recession coming soon, and there's actually, different signs. Like 3 of them I'll point out here to you. One, in the first quarter, the first reading of GDP was actually negative. In the past, a recession was considered 2 consecutive quarters with a negative reading on GDP. So we have 1 quarter of that. Second thing, that we're seeing is both employer, or business confidence, and consumer confidence is dropping. And so often that is a precursor to an upcoming recession. Third thing, and this has been talked about a lot in the financial world the last 2-3 months, is what's called the yield curve is flattening, of where the difference between the yield on a 2-year Treasury bill is like 2.6% right now, whereas on a 10-year Treasury bill it's at 2.8. So it's a difference of just 0.20% or 20 basis points. And in a healthy growing economy, that spread should be over 1%. So that's a third sign that a recession may be coming. But do mortgage rates cause the recession? And the answer is really no, they don't. What usually has caused each of our last recessions, 6 out of the last 7 recessions, have often been caused by the Federal Reserve. Why? Well, it's because typically they start raising short-term rates too late, then they raise them too far, too fast. And that's what it appears is going to happen this time, of where the Fed should have started raising short-term rates last year. They just started this process now, and it's expected they're going to raise short-term rates by 0.5% in June and July. And so the Fed, and you can see this on this chart right here, 6 out of the last 7 recessions, when you see the Fed raising rates, they always raise rates into a recession, then they have to cut rates. So the Fed has actually been the ones that have been really causing the recessions 6 out of the last 7 times. Now, so do rising mortgage rates cause recessions? Let's go back to that. Well, here's another chart for you to look at. And you can see before the last 3 recessions, other than the COVID one, the last 3 recessions, mortgage rates were actually dropping before the recession and kept dropping during the recession. So you just have to know that that's what has happened, and I expect will happen again this time. Next, one of the things people have asked, okay, the last time mortgage rates rose substantially was in the second half of 2018, when mortgage rates hit nearly 5% then, back in November of 18. Well, what happened to home prices here in Denver? Well, in 2018, home prices, year over year went up just 3%. And so you go, wow, that would be great if that were to happen again. But know this, first off, in 2017, home prices had gone up about 8%. So they dropped from 8 to 3, which was like a 60% drop. In 2021, home prices went up 19% here in Denver. So a 60% drop takes us down to the 7 to 8% range if we were to see that same size of drop in price. But I don't think we're going to, and here's why. First, back then in 2018, 2019, or 2017 through 2019, we had 1.5 months of inventory of homes for sale. Today, and for the last 18 months, we've been running about 0.5 month. So inventory was 3 times greater than it is today. And the market reacts very differently based on months of inventory. And with inventory being around 0.5 month, I don't expect home prices to drop much, even though mortgage rates are rising. Another thing to realize is over the last 18 months, with inventory levels around 0.5 month, prices have gone up on average about 15% a month over month, or 15% year over year for every month on average. So that's what I unfortunately expect to continue to see until we have at least 1 month or more of inventory. We now have identified there probably is a recession coming. So should you buy a home right now knowing that a recession is coming? and many people are afraid to buy a home before a recession is coming. Well, here's my next chart for you. You can see on this chart 4 out of the last 5 recessions that occurred, besides the COVID one, home prices rose in Metro Denver. First time was like 13%. The next 3 recessions, prices rose about 5% year over year on average. Thus, realize home prices don't drop because there's a recession. And so if prices are going to continue to rise, I believe you should go ahead and buy a home. Okay, now you first got to realize, okay, is my economic, financial, job situation in strong enough shape for me to buy a home in case there is a recession and I were to lose my job? But that's something only you can decide on, okay? But the next thing I want you to realize is, like I showed in that earlier chart where mortgage rates have dropped during recessions, if you buy a home now, you may get an opportunity in the next year or two to refinance your mortgage and drop your mortgage payment. So another thing to help you go, maybe we should go buy a home today. And please know, as I've shown, prices are going to continue to rise on homes. And the only way to lock in your cost on a house is to buy it now. If you wait, prices are going to continue to rise. So I just encourage you, if your own economic situation allows you to go ahead and buy a home now and don't wait, because procrastination does not pay off in the Denver real estate market. And if you like this video, please share it with others. Subscribe to my channel. And if you have questions, you want to talk, go ahead and text me. My number is 303-881-6374.